Welcome to episode 62 of Kontrarian Korner. I'm Ben Killeran. Today we have a very special return guest on to talk with us about the precious metals, mercantilism, tariffs, everything that's going on, geopolitics, current events, and how that impacts markets and everything that's going on in the world. So, Vince, thanks for coming back.
Hey, Ben, thanks for having me back. Happy to be here.
Yeah, so I figured we could start off with Trump deciding to make mercantilism great again. But I think with what's going on in the last couple months, really, there's been a lot of headlines, a lot of changes with tariffs and basically impact on precious metals, rare earth metals, all these different things. And you kind of called it mineral wars before we fired up the podcast, but I think that'd be a good place to start because that kind of feeds into markets and precious metals and all the stuff that we kind of both focus on.
Yeah, mineral wars is a great phrase, and I'm saying it's a great phrase. It's not my phrase. I think Josh Fair, at least the first time I heard it was Josh Fair at Scottsdale Metals. And when he said it, I'm like, yeah, this is just a logical next step in the mercantilism evolution in the world. So I think current events is a good place to start because the trajectory from, let's say, the Ukraine war to now has been the world has been, among other things, right? The world has been looking to redeploy, rebuild onshore, reshore supply chains, and a big part of supply chains is raw materials. And so while they hadn't been front page for a long time, with the exception of oil and gold, the raw materials become a problem because if I'm rebuilding rare earths is the easiest one to understand. If we're dependent on China for rare earths, to import their rare earths, then it would behoove us to cut a deal with them. How important are rare earths to us, et cetera. So in the list, you have critical minerals, and copper is one of those. Platinum, I don't even know if it's considered one, but it should be. Platinum, palladium, all the rare earths, rhodium, the other PGMs, silver, although it will never be named as such. That's my tinfoil hat. And all those metals, the world is, this is an old story for your audience now, but it's not done. The world is deglobalizing. And deglobalizing is, oh shit, we can't get the things that we used to get from the BRICS. The world, basically, it had been forever, for 50 years, the world had been a split between, like a company, management. G7 was the management, and the labor was the BRICS. Okay? And that's not diminutive. I'm just saying that they were the labor force and the supply chains, and along with that came most of the raw materials. Because, hey, we're not going to dig for coal in my backyard, in France or in England or wherever. England has coal. We're going to dig for it over there where those people are. So it's a global south. It's kind of an indirect colonization. And so at some point, the BRICS said, oh, shit, we're underpaid, and they went on strike. And then that was they were ready to do that. It was happening slowly. And so some countries will say, well, you can have our raw materials, but you have to pay us more. This is even before the tariff thing, right? Some countries were saying, okay, we'll give you our rare earths, but you can't export rare earths to us. You have to build a battery factory here. Boom. That's one way to do it. Another way, a country says, well, you can mine for gold here, but we want you to give us 20% of the mining gold as a fee, maybe at spot, maybe at a discount to spot, maybe with a gun to your head. So then you go to Mali, which happened last week, and you say, all right, we have a military coup. We're just going to take the gold. So Barrack is screwed. That's another conversation. Then you go to Latin America. They have like a different vibe in Latin America. It's just leading up to the tariff stuff. The vibe in Latin America was, well, we're no longer authoritarian. We're not going to nationalize. We're looking up north and say we're not going to nationalize because we're capitalists and we're democracies. So here's what we're going to do. we're going to go on strike. Literally, the miners are like told to go on strike by the country. Go on strike, get more money, right? And so to get the strike settled, you have to pay the government money, Or here's one for you. I think it was in Peru. I forget. It was copper. We're going to shut down the copper mine because of climate change. And I'm like, a Latin American country saying that? I'm like, okay. So they were pandering to the left vibe, and that was your justification. So every part of the world, so Latin America, we're going on strike, pay us more. Africa, give us some of the gold or you're out of here, right? Asia, various versions of we're either going to take it with a gun, right, Mali, you have to build a factory here, or we're just going to charge you more for it, hence a tariff. And so that's the trajectory we're on. The reason I bring all that up and paint that picture is because we're already on that trajectory. So when Trump says tariffs, or when someone else says counter tariffs, well, all that really is it's a spike in the trend. So it's kind of like what's happening now is what's been happening, but you're getting a little preview of the end game. So this is what, it's like a flare up. I have a disease. The disease is deglobalization or mercantilism, call it that, right? You say, okay, well, here's a big flare up of it. You better take some medicine. And so the tariffs that Trump issues are basically, it kind of forces everyone to show their hand. The copper tariff. The reason mineral wars is such a good phrase because the next economy, whether it be making America great again or what's the next economy? The next economy, at least that we're under the impression that's going to succeed, is we need to build more and become self-sufficient in manufacturing. That's pretty simple. What are we going to build? We're not going to build buggy whips. We're going to build AI data centers. We're going to build storage. We're going to build drones. We're going to build hypersonic missiles. Military is going to be big in the building back. And that's the event that just happened. But I'll get to that in a second. So what do you need to build these things? Well, we're not going to make a steel factory to make steel girders, but we are going to make a specialty steel item, these alloys that you need to, everything we're doing is to set up for the next economy and the military. That's what we're doing. So when you look at silver, you're looking at, let's just simplify it, missiles, right? When you look at copper, you're looking at the whole dilapidated infrastructure that we need to refurbish and make better. When you're looking at platinum, well, I think down the road, there are going to be a lot more industrial uses for platinum. But right now, it's will we do EVs or not? That type of thing. We'll discuss that. Obviously, we'll get to platinum. I know you want to talk about that. So when Trump says 50% tariff on incoming copper, he's saying we're not going to buy your copper ore anymore. We're going to make our own. And we do have plenty of copper ore. We don't need to make new copper mines. What we need to do is stop selling it. So when you put the tariff on, you're basically, the other side of the coin is, and we're not going to export it. So tactically, it would be smart to do that for Trump because we are self-sufficient in copper. We can be self-sufficient overnight. And in being, you take what you're self-sufficient at and you say, who wants to buy it from us? I'm sorry, whose economy needs to sell it to us? Well, we're not buying it from you anymore. Let's negotiate a bilateral deal. The flip side is, what is he not tariffing? Well, he's not tariffing silver. He's not tariffing platinum. He's not tariffing all these things. He's only tariffing copper. Why? Because we need the other things. What happens if they're not going to? Or what happens if Mexico says, you know what? We're going to tariff. We're going to charge you 40% more for our silver. Like, that would be a problem, And so he's not going to tariff silver because we need it. So it really comes down to, what do I need versus what do I not need? So you tariff what you don't need, right? And that's why the rare earth struggle with China was a big deal. Now, I'm not saying that we were weaker in that negotiation. I know China's got their own issues. Xi is probably struggling right now. I don't know how, but I don't see it. But the rare earth thing with the U.S. and China was on the surface of it. We don't need your rare earths. Your economy is going to shit, right? And then China's like, okay, well then you're not going to have our rare earths, and our economy will go to shit. Now, what's not in the press, but I think is very important, I saw it in one place, and that is how long would our automotive industry survive without rare earths? And it was like the number was like 6 months, right? So like that's like and this is Trump who's got an agenda, and if he can't get that agenda done, popularity goes down, agenda can't get done. So he's incentivized to negotiate with China. Now, China's got their own incentives, but the biggest thing that I always want to say one place as well, is that rare earths are really important for our military. And I don't just mean our military. I mean the stuff that we make and sell to Australia and submarines and sell all these things. If we stop making them, then we're not exporting anything, except oil from shale. So when I'm going down a rabbit hole here, but Trump is forcing the issue and making people scramble more. Just bringing it from macro to micro. Isn't it interesting how when we were on the eve of World War III with Iran and Israel over oil, which I know you want to talk about that too, over oil, right after that, there's all these news about Mali confiscating gold, Africa demanding more gold. What's the other one? I just wrote about the other, but mineral rights everywhere, short squeeze in platinum, an emerging short squeeze in palladium, short squeeze. Why do all these short squeezes happen after the war truce? It's almost like there's a threat of a world war. They put a lid on it, and then they go, all right, well, now that we have peace, let's get that shit that we need before there is a war. So it just kind of accelerates everything, Platinum, a lot of financial people were short platinum, and they were the catalyst for the first leg of the move, or the second leg of the move, I should say. Anyway, so the world is locking down from each other to rebuild supply chains, and there's like fences going up around individual minerals. And copper is a main one, not because we don't have it, because we don't refine it. We export raw copper and import refined copper. And the Chinese are offloading a shit ton of copper scrap from us, just like they're offloading a shit ton of silver in concentrate form from Mexico, from Latin America in general. So there's all these, it's like there's a lot of leaks that have to be plugged, and we've been letting it go on forever. It's kind of funny because, just thinking about it out loud, we never give a shit until it's almost too late, and then we throw everything at it, And I guess that's what happens when you're the champ. When you're the champ, you can afford to ignore it, and then you've got to just pivot an ocean liner, 180 degrees and focus on it. We are in the process of pivoting an aircraft carrier, is a better analogy, to put all of our gun sights on minerals and trade zones. So that's what's going on with the latest in it's like mercantilism, mineral wars. Oil is going to be in there soon. I don't know where, but maybe oil already happened. And it's going to happen again, but that's what's going on.
Yeah, so, it's definitely. You see some elements of procrastination on dealing with some pressing issues that I think have been pretty obvious for a while, but takes a while for the political class and powerful types to get behind it. But to dig into platinum a little bit first, and then we can get into gold and silver. I think it'd be good to get into some of the stuff I've been seeing about the Chinese jewelry demand and some of the stuff you were saying there briefly about a short squeeze. I know it's already had a big move, but my view is that longer term, there's still reason that it's going to go significantly higher, but probably is going to take some time to digest what's happened in the last couple months. So I think that'd be a good way to get into the metals is to start with platinum.
Yeah, I think your comment about, it's come a long way and it needs to chill out for a little bit. Yeah, that's exactly it. We should not look at it like it's a meme stock. Yeah, so just dovetailing from the mineral wars to the bigger picture for platinum. Platinum is one of the metals that is involved in that, and I'm sure with the shortage of platinum on the production side, and what's the word I'm looking for? Well, let's just go through it. So we already did the secular version. That's what's going on in the world, right? Industry-wide for demand. See, I think this is my longer-term picture, but it's not relevant at this moment. I think there are going to be more and more applications for platinum, just like there are for silver. And so, one of the reasons platinum got hated, people forget, one of the reasons platinum got hated is because they went away from diesel engines and they used palladium for gasoline catalytic converters. So no one cared about platinum anymore. And for the last 10 years, because they're PGMs, because even though they're not from the same place in the ground, or on Earth, which is Russia, South Africa, even though they're not, platinum is dense and palladium is crumbly like a sponge. They're not the same. They're barely in the same category, in my opinion. But I'm platinum biased. But so what's happened over the last 10 years is the palladium market was broken by the bulls, and that was a couple banks back then. They just broke it, and they just kept buying palladium and selling platinum, and they've been doing it forever. So they were always long palladium and always short platinum, and simply put, backing their idea, palladium was always in backwardation. So if you're long palladium at $1,000, you get to roll it for $990, and you get a $10 dividend every month by being long. You paid a dividend by being long the backwardation. Very common strategy in oil. And platinum was here. That was palladium. Platinum was here. So platinum, you're short platinum, and in a month, you get to reshort it at a higher price. So it's like these are carry trades that structurally palladium was used, platinum was not. And so it's like, all right, let's just put it on. Now, the reason these banks got so aggressive is because these are very small markets. And if you're a Goldman Sachs, who has a big hand in base metals, copper, nickel, they know copper, nickel, you know what's going to happen. Like, you're going to see the problem coming before anyone else does. And you'll say, okay, there's a problem. Boom. Or you won't cover and you'll say, I don't care. I'm covered, So they have been doing that, and I think I did a podcast about this right when this started. I said I think that the banks had a trade on long palladium, short platinum, and then all of a sudden, not all of a sudden, slowly, platinum started firming up, and so the contango went away, and the short-term demand for spot started very organic, started to happen, and a lot of guys were just, we've seen that before, don't worry about it. We've seen that before, don't worry about it. And so that's your fundamentals, your industry drivers, right? So you had a table set for a lot of people that were too short and relying on time to bail them out. Oh yeah, we'll get more platinum next week. Don't worry about it. And the banks were on the same side of them. So then gold just gets too expensive. And Chinese investors, and this is where I would push back on something that Goldman said. Chinese investors start, ETF types. They start buying platinum. They stop buying gold. They're buying platinum now. I can almost see like the China investor meetings with the CCP. Okay, we got gold up to this price. Now let's get the other ones up to the price they should be. It's like one at a time. Platinum is next, palladium, maybe they don't care about palladium, silver, all these metals. I think gold is kind of like going to drag everything higher because it's stabilized higher. Like, for example, the gold-silver ratio, the gold-platinum ratio, those should shrink as the lesser metals go up. But anyway, the banks were under the public opinion that uh, the platinum investor demand was overdone. This is when it was trading 1,000. The platinum investor demand was overdone. There is some demand, but it's overdone, and that demand is almost calling it irresponsible because platinum shouldn't be worth that much. The concept was platinum's been in this range, 700 to 1,000, call it 850 for value, and now it's trading 1,100, and it's high relative. I could just hear the bank saying, but it's high relative to where it was. Why would they buy it? And my pushback was, well, that's because they're not looking at where it was. They're looking at gold, saying, well, shit, it's like the next meme coin is platinum to them, you know? Anyway, so there was a lot of buying underneath 1,000. The sell flowed out. It got above 1,000, and there were a lot of shorts at the industrial side, and they had to cover and unwind trades. They didn't have the spot, right? And what they were doing is they were shorting deferred, and when it got to spot, the industry types were saying, okay, I'll just take my short and roll it back out. Well, they started to cover, and the market went into backwardation slightly, and the lease rates went up. It's almost like someone squeezed it. I got to be honest with you. It's almost like China said, I think we'll squeeze it, you know? But it gets above 1,000, stops go off, market stabilizes a little bit higher, and then all of a sudden, most of the banks shut up talking about platinum, except Goldman. Goldman says, we think it's temporary, not structural. And this is where the fundamentals kick in, I think, more importantly. The story had been forever, we don't need platinum anymore, we have EVs, right? That's, you and I were talking about that. We don't need platinum anymore, we've got EVs, right? So platinum is dead for the future. And that story, I think, had been in the market for 5 years. So nobody's mining platinum anymore. And now you've got, Democrats are out of office, Republicans are in. I almost feel like in America, it's like, I guess we're going to hybrids, you know? Like we got to move somewhere back towards the internal combustion engine. And, every like the simple equation is every time bad news comes out about EVs, good news comes out about diesel. Same idea, or internal combustion engines in general. So I think the market was really leaning on the EV story and the China EV story, because China's out there at the front of this talking about it all the time. So my question is, conspiratorially speaking, why are the Chinese buying platinum if they're the ones doing the EVs? So I think that EVs are not going to be what people think they are in China, and I think there's going to be a step taken back from that. So we get up to like 1,200. Now this thing is starting to catch. Now the China FOMO crowd is really in, and now you got a problem. Apparently, there were a lot of people short the 1,300 call, and so if you look at a chart, when you bring a chart up, you'll see it kind of hovered under 1,300 with big ranges, and then once it got above 1,300, it started getting crazy in both directions, but really not getting below 1,300 again, not significantly anyway. So the moral of the story is, if you look at the platinum chart, you can see how we hovered, like say middle of June, teased at 1,300, and then we broke above it, June 25th or thereabouts, and we've never gone back to it. So my conclusion, tying the long term with the industrial, with the macro, the micro, is if this were not a mineral war, you would see that market get squashed, and then we would see the resilience of the buyers. But this is a mineral war, and whoever was short before isn't going to short it again. This market has fundamentally changed in a month. So it's going to be bought on any dip. I don't know what the price levels are, but I will say this: like, what is the point that you said? You said it's got to take a breather, right?
Yep. Yep.
I'm looking at it that way as well. And the breather is. I started watching it last week. I'm like, they're going to buy palladium again. Doesn't have to make sense, but they're going to buy maybe Russia, but it's like it's a PGM, let's buy. It's like buy every meme coin. So what I started to look at was the platinum palladium spread. And if they start, this is what I said to myself, if they start buying palladium, they start having those $50 runs. In the past, platinum always gets marked lower when it's over. Platinum they get marked lower. So I think there's a lot of fear in the market. Maybe not fear of something that's coming down directly available to them, but they see copper, like no one wants to be short these metals. So I think palladium is kind of like silver. Palladium and silver have to catch up to gold a little bit for fundamental reasons, and the lease rates in silver tell me that. Like the lease rates in silver, when he put the tariff, platinum rallied, then he puts the tariffs up, and then silver rallies. That's not a coincidence. All those things are happening for different micro reasons. But the big picture is minerals are the new oil. Oil is a mineral, right? It's a liquid mineral. But and it's not going to stop. So I don't think it's going to stop. But most of my speculative money right now is in silver. I took a hit today. I was long. I did get long platinum. I caught a nice move there, but I got out of it after my signal was over. Right now, I'm just watching, going, that's crazy. So that's my platinum story.
Yeah, you mentioned silver there a couple times. I think, like you're saying, that with the move that gold had kind of into April, I guess, probably was going to take a breather at some point, and you'll see some of the other stuff start to catch up. And that's, you look at where silver was in called early April. It's obviously had a big move there. What's your kind of view on silver breaking out? Are we going to push past 40 and make the big move kind of by the end of the year? Or are we going to be waiting for a little bit longer?
I can make some proclamations there. So I'll be wrong in a couple months, but let me say it now. Like, I feel very comfortable saying the following. When it broke 35, I said above 35, 40 is not a problem. Right? So now we're and I got long. I got long at 33 and a half actually. But I'm not like a lunatic. I'll get long and I'll lighten up and get it. So I'm long again. Bank of America put out something really nice on silver. It was in March, right before it ran, right? And they said silver $40 by the end of the year. And then UBS said, we like silver, we're not going to raise our target yet. And then even Goldman, which historically just hates silver, comes out and starts saying, well, silver's around. Usually it's like silver sucks. I mean, they literally would put in reports, silver tarnishes, don't buy it, buy gold. Like the kind of shit that you'd hear like in a geology class, silver tarnishes. But last month they said silver's rally's not overdone, which is a change. And I think all the players, the reason I mention those banks is not because they have an opinion. Their opinions right now are based on the flows they're seeing. And they're seeing demand for silver. Plus, there is a crisis at the LBMA. They don't have any free silver. They don't have anything available. So the only thing that keeps silver in check is time. So over time, retail scrap will sell. Retail will sell, scrap will come in. But with Trump doing his thing, you don't get that time. And just to go back to what, a conversation I had with a metals mint, I asked him 2 days ago, I said, what are you seeing on the demand side for physical at the investment level, not the industrial level? And he goes, the retail is constantly selling It's unstoppable. They're just puking every coin that's out there. They're selling, and I'm gonna. They're just selling every chance they can get. And I go, wow, why are we holding up? He goes, because really, really, really wealthy people and entities that shall remain nameless are buying the 1,000-ounce bars. And so it's like the retail is selling into high net worth demand. So it's like, you and I are puking because we have to pay the groceries. And meanwhile, Rockefeller over there is going, yeah, I'll take that. So it's the same. That's what he's saying on his retail side. He's like it's unbelievable, but everything that's coming in on the coin side, on the smaller bar side, it's getting re-smelted into bigger bars. And it's being offloaded, which is consistent. This is why I think it's interesting. It's consistent with when we had that, when we had the repatriation of silver and gold, and all came back into the U.S. That's what happened then too. All the 1,000-ounce bars were trading at a premium to spot, and coins were trading under premium, under spot or at spot. Very rare for the bigger bar to trade higher. Usually it's a discount, right? Under the volume discount type of thing. Anyway, so I think so. Get back to some prices here. So 40 is not a problem. That's the first thing I think. And this is a technical thing. I'm not a technician, but I do pay close attention to the gold-silver ratio. If the gold-silver ratio stays under 89, then I think 65 is not a problem. And those are my numbers, and they're based on some levels that I have, but they're actually corroborated or confirmed by Michael Oliver, who looks at it upside down. And basically, we both come to the conclusion that over the next 3 to 6 months, I don't know what his time frame is. Over the next 3 to 6 months, silver could trade $55 without a problem. That's me talking, right? So, am I going out there telling you to buy it? No, I told people to get short today after the number. So, I'm a micro trader as well as a macro trader. So I have a core position that I'm going to hold on to, and I'll trade it back and forth. But that's because I'm very familiar with it. Silver is too cheap relative to gold, and I think all the banks that were short platinum, they were also short silver. See, I think not many people talk about this, but I'm going to lay it out there for you, like using silver, gold, and copper. When the Russia-Ukraine war started and the central bank started buying gold, everyone bought gold, investors included. And investors say, I want a pure play. They don't want hybrid plays. So I want to play on inflation, on the war. What am I going to buy, gold or silver? I'm going to buy gold. What's my bank going to tell me to do? Well, silver is semi-precious. You should sell silver as a hedge for your gold. And that happens. Big. Okay. Now, when you think their economy is recovering, what do? You say, well, should I buy silver? It's industrial. Well, silver is sort of precious, so the gold will hold it back. You should buy copper. So everyone's long gold, short silver, and long copper. Like I have the grid of it. Like it's like a square. An efficient frontier. And the platinum freak out, I think, caused people to say, well, shit, let's cover our silver. So even though the tariff was on copper, silver caught a bid because everyone's saying maybe that'll be next. Now gold, everybody's already long gold. There's nobody there to buy it. And I think that's what's happening. Gold, silver, and copper and platinum will all trade at more reasonable levels to each other. So gold to platinum, gold to silver, and silver to copper. So that's it. I'm just, I just think that's the way to be. You got to be long.
Yeah, I think it is interesting when you kind of look at all the stuff going on with the metals. And my view is that gold will kind of the next couple of years continue to march higher, but there's going to be some catch up among the other metals. And it'll be interesting to see how long it takes. But like with platinum, like we kind of talked about, it'll probably take some time to rest, take a breather and all that. But I think with silver, there's a lot of people that have pointed out that when it gets going, like it can really move very quickly just because of the relative size of the market and all the things that kind of once the feeding frenzy gets going, it's something to watch. So to move on from the precious metals, though, I think it'd be interesting to get your thoughts on oil while we have you here, because I think there's some things going on with positioning. Everyone was freaking out about the Strait of Hormuz and all the geopolitical stuff, basically in the last month, give or take. And obviously that didn't come to pass, but what's your view on the oil market and where that might be headed, maybe near term versus longer term secular view?
All right, I want to touch on the Strait because that was, I'm not saying it wasn't a risk, but that was picked up by the press in a huge way. Once everyone figured out how the Strait works, it became a news item. Oh, the Strait, it's like the hot news item. We need to talk about something. And then the press got a little bit educated on what the Strait was. Well, I was taught about the Strait by probably the greatest oil analyst who ever lived. That's my opinion, the late Peter Butel. I would sit down with him. We were partners. We were business partners. At the end of his life, we were business partners. I would teach him options and flows, and I would just suck his brain dry on geopolitics. And this is what he said to me back then, and it served me well even right now. Like, I didn't get long oil because of it, okay? Because of the geopolitics of it. He said, the Strait of Hormuz, if Iran does anything to that strait, it's the end of Iran. Like, we will not fuck around if that happens. And he actually showed me where the gun turrets were. He's like, we have the Tomahawk and cruise missiles here in the ocean. He goes, and Iran's got their gun turrets here and here. And this is how they would do it. They would sink a boat to block the way out. I go, well, I go, okay. So he's like, it's that important. It's like, and no one ever talked about it. Like, we were always there. So when Israel did their thing, actually they did their thing, and then we dropped a bunker buster bomb to try and make it look like we were adding stability. Iran started to threaten the Strait. And I wasn't saying it like this, but I was just saying that risk is there, but it's overblown. That risk is there, but it's overblown. And it's overblown because would Iran basically nuke their own industry? As long as Israel did not, I forget the name of the island.
Karg Island. Karg Island.
Karg?
Karg is the big export terminal.
Right. As long as Israel bombed everything but that island, Iran wouldn't feel like they had to destroy the inlet, the strait. And you'll notice. Well, I noticed. I was definitely all over this. Trump cuts a deal with the Saudis where they're going to invest 500, but maybe that was UAE. He cuts a deal with the Saudis where they're going to invest money with us, like trillions of dollars over years, right? And I know that deal goes like this. All right, you've been selling treasuries. Please stop doing that. Saudis, what are you going to do for us? All right, we'll give you discounts on our next jets, the good ones. We'll give you the F-16 shit. We'll give you the new ones. We'll make sure, we will continue to make sure that you don't get bombed by the Iranians. They're like, okay, we're used to that. What else are you going to give us? We'll give you great deals on a bilateral trade. And, the Saudis probably got a lot out of it. And so we do that. That deal that was a really good deal. It's like getting your anchor tenant for your mall. I got a Gap or an Apple store, whatever you want to call it, right? And then what does he do? He cuts the deal on rare earths with China, or at least creates a ceasefire, if you want to call it that, or a truce for now. And right after that, Israel just starts bombing the shit out of Iran. Iran. And I go, oh, so Trump's going to the Saudis and saying, by the way, this is my opinion, by the way, things might get worse. Don't worry, we got you covered. And then we go to China. We go, listen, things might get worse over there. Let's do the rare earth deal, and whatever they talked about, we'll make sure nothing happens to you. Or we'll make sure. Well,
I think if I could jump in on the China topic too for a sec, that didn't they say we're not going to sanction China for buying Iranian oil?
Oh, there you go. That's one I forgot. Right, exactly.
Yeah.
Right, there you go. So it's almost like it's right. I mean, picture the U.S. going to China saying, rare earths, this for that. We'll do a ceasefire on that fight for now. And listen, it's almost like we made Israel is now the dog off the leash, the bad cop. And it's like, listen, you give us the rare earths, we won't sanction you on Iranian oil, and we'll just make sure Israel does not blow up that little island, or whatever. So I could just see that 3D chess happening, and then boom, and now I could see China going, you want to blow up Iran? It's okay, we'll deal with it. I could see Russia, Putin going back and forth. Oh, we're a defender of Iran, but we think they should do this. So I look at the whole geopolitics of it, and I say, Strait of Hormuz, no way. And that's how it ended up playing out. So that saved me money, because otherwise I would have been like every other lunatic buying oil, expecting World War III. Anyway, I'm sharing that because going forward, unless Karg Island is attacked by Israel, you should not see a problem with the strait. Because if you do see a strait, we will probably wipe them off the face of the earth. Because that's like messing with the strait is like messing with the Saudis. And so that's what happens. I mean, I've plenty of instances seeing that before in conversations with Peter and other people. But so that's what got us to here. The thing is, and this is where I think you have to come in on this, everyone was short oil going into this news. And now everyone's long oil. So the fundamentals are screwed up by the crowded longs now, I think.
Yeah, I think the thing that's interesting is, I think with the way things have gone for the last 6 or 12 months, I think 65, 70, 75, somewhere in that ballpark makes a lot of sense for the different players involved. The Permian can, right. I mean, I don't think it's going to grow at 70 a barrel, but could it keep production flat? Probably. And then you'll have OPEC with their production increases there's some debate about whether that's paper barrels or not. Apparently, their exports have been increasing more in the last couple months, but I think there's, in the next 6 to call it 18 months, basically by the end of 2026, I think there's a lot of things that'll happen from, okay, OPEC is done announcing production increases, and the Permian is probably, I think, going to be either flat. I don't think it's going to grow. It could shrink as far as production. We'll see. Kind of right. That'll be dependent on oil prices, obviously. But I think there's a lot of things where they'll kind of be coming to a head in the next, like starting the next 6 months, but really sometime in 2026.
Do you think, I guess I'll just flip the whole interview around. Do you think, starting with my assumption, we're working with the Saudis again. The Biden days are over. We're back being buddies with the Saudis. Do you think the Saudis want oil above or below $70?
I think they're fine with kind of where things are now, because they realize where this train is headed over the next 3 to 5 years. So like near term, I think they're fine with 50, 60 a barrel, honestly. But I think that's mostly because they realize they're going to make it up on the back end when you see the decline life of the Permian, or the decline rates of the Permian, and the short reserve life there compared to what they have in their oil fields. So I think they're kind of fine with oil staying suppressed for now, because they realize that, hey, like, these guys are basically going to shoot their wad at 50 or 60, $70 a barrel, and we're going to make it up on the back end. So
plus they're the low-cost producer. So if it goes too high, you encourage shale, or what's left of shale, right?
Yeah.
If it goes too low, the OPEC members start griping.
Yeah. So I think for the time being, I think 70, give or take $10, is probably where things trade, at least for a while. And then there's eventually going to be the big one that no one believes, and it's going to go, I think it's really going to go a lot higher than people expect. But when that starts, I mean, you probably have to have the fundamental case of, okay, OPEC is not announcing production increases, and you have the Permian, like people are wondering, like, hey, why is production going down? All these different things. So
Right.
it'll take some time, but I think that's it'll become obvious enough eventually where it smacks people in the face, and then that's when I think the fun begins for people that have been stubbornly bullish, at least long-term secular bulls on oil. So
Right.
you did mention Saudi and the Treasury bonds and some of the ties there to the U.S. If we could sneak some of that in before the end, I think that'd be an interesting closing topic, because I know Bitcoin's been on the move lately. People have talked about, oh, they're using stable coins to back the Treasury market and all these different things. If we could get into that briefly before we wrap up, I think that'd be a good place to close.
Yeah. I think that's a really good place. You know, just looking at it through the eyes of the U.S. government, nobody's. I mean, I'm using hyperbole to make a point. Nobody's buying our bonds anymore. Everybody's de-dollarizing. Everybody's buying gold. We need someone to buy our bonds. If we don't get someone to buy our bonds, then we can't borrow. And if we can't borrow, then we have to tighten our belts. So it's all about, you need to borrow to maintain your standard of living. And now we need to borrow more because we're retooling the country. So everybody, again, the BRICS have gone on strike. They're also going on strike buying our stuff. And China has done a lot to make it more palatable to have gold, removing a lot of the negatives of gold to compare with treasuries. And that's because they're setting up vaults in every BRICS country, which makes it more like cash, makes it easier to do the thing. So now you go to the U.S. and you say, well, you look at the U.S. eyes, you go, well, who's going to get to buy our treasuries? And so you go to the Saudis, say, okay, stop selling them. We'll give you a deal. And we gave them a deal in 1971 or 1976 when we said, okay, whatever the treasury rate is, we'll give you 50 basis points more. Like that was a deal. We did that deal. It's out there somewhere. You can find it. But so you solidify the bleeding. Saudi stops selling. UAE says they're going to buy. You cut some other things, and there's a lot more that has to be done there. But you need a reason for people to own treasuries, right? And it's actually, I don't know if it's going to work. I think it's going to work, but it's really beautiful in a very Machiavellian way. Okay, we need people to own treasuries. So let's talk to our banks. We go to our banks, JP Morgan, all the banks. We say, all right, we want you to own more treasuries. And the government says, buy more treasuries as part of your reserve requirements. The banks say, no, because we can't leverage them as much as we want to, and you guys won't ease up on that. And so along comes stablecoins. What's stablecoin? Well, stablecoin is whatever you want it to be, but the key to a stablecoin is what can you use for collateral. So the Genius Act passes. What you do is you create demand for treasuries by doing the following. I'm making this up, and I'm JP Morgan, right? And I go, all right, stable coins are legit now. Only FDIC banks can have them. We're an FDIC bank, and the government's going to allow customers to own treasuries and pledge the treasuries to buy the stable coins. So treasuries become collateral. So now I'm going to make a product up. Again, I'm making this up. All right, here's my product. My product is, and this actually is a product that's being made right now. How would you like to own all of the upside of gold? And if it doesn't go up, you could still get 2% dividend. Well, what's that? Well, buy a treasury, stake it as collateral, and we'll give you the gold coin, whatever the hell it is. It could be a non-fungible, it could be one of those monkeys, a bored ape. But the point is, you encourage ownership of treasuries by the banks and their clients by allowing the banks to create products.
It's just the NFT of a gold eagle.
Yeah, exactly. Like, exactly. It's the same idea. It's like, Amazon bucks or, Bob's store, these are coupons, so you go in and you say, all right, I want exposure to gold and I'm a client of JP Morgan. And JP Morgan says, well, ETF, we don't like that. Don't do that anymore. Futures, we've got this new thing called the stable coin. And not only does it allow you to pledge treasuries, don't put your money into a T-bill or a treasury or something, which is what all rich people do anyway. We're going to allow you to park it and get the upside in gold. And by the way, this is our product. So it allows each bank to create a product. So I'm JP Morgan. I'm going to have a gold coin. I'm going to have a gold stable coin for 100 ounces, right? I'm another bank. Oh, I'm going to go after the retail. I'm going to have a gold stable coin for an ounce, And then you go to another. Oh, I want to go get the Japanese and Chinese business. So I'll do stable coins for gold grams. And so now you have all these different flavors of product, competing for money, and it becomes who has the network. I think the best way to understand stablecoins going forward is if you understand money markets, stablecoins are going to become the next money market. And the money market is a fund that's based on repo rates that the bank passes through to clients to give them the better rate. Well, that's what stablecoins are going to be. And I think you create a cushion or a sponge. You create a demand for treasuries by the banks and by their clients. You turn a liability into an asset. Hey, I want to buy Bitcoin. Okay, you can buy it with a treasury. Do I have to sell the treasury? No. And then there, boom, you've got it. It's the sponge thing. So I think it's going to work. And here's why I'm going to say it non-cynically. Half the world is worried about devaluation of money. So they're buying gold. And I'm in that camp, right? I'm a gold person, right? But the U.S. Treasury is no longer the safest asset on earth. Let's start with that. Gold is a safer asset than U.S. Treasuries because you can have it confiscated. So if the U.S. no longer can sell itself on protection, we're not going to steal your money, we swear. We only did it with Russia, right? Okay. If the U.S. no longer can sell itself as a Volvo, it's the safest car out there, it has to go out and sell itself as a fucking Lamborghini. So we're not a Volvo anymore, okay? Gold's the new Volvo. Fine. We're going to give you upside. We're going to make the U.S. Treasury a FOMO product.
All gas, no brakes.
I'm sorry, what?
All gas, no brakes.
Right. We have to say, and this is me being very patriotic here. Who are you going to trust to innovate? Them or us? Now, I'm very good at dumping on the U.S., but we have, take out a flag on this conversation. We have a lot of problems, but we have the rule of law that has not broken yet, at least not publicly. We have a government that recognizes that even though it wants to take control of everything, it has to let what little entrepreneurial spirit is left out there function. And so stable coins are like, here we go. So now we're going to make, treasuries aren't safe anymore. Well, fuck it. Let's make them like Bitcoin. That's what you're doing. So the West is the upside and the East is the downside. The East is gold and the West is stocks. That's how I'm looking at it. So I think it's going to work out. I just hope it works out sooner rather than later.
Yeah, I think lots of stuff to think about from the last hour of conversation. But before I let you go, I do have to get another book recommendation from you while I have you. I know we've kind of had a couple in past podcasts, but if you have another book, I'd love to add it to the reading list. Yeah,
I've got a trader's book. And the reason I'm thinking about it is because I had a couple of subscribers ask me what to read. And, there's a million books you can read, and everyone's got their own flavor. I'll give you a book that I've read multiple times, and I'll tell you what I got out of it, and people will look to read if they want to. If you're looking to understand trading through the eyes of a trader with plenty of charts and examples and conversation between two traders on the same page saying, oh, I saw that. Why did you? It's like you're having a conversation. You're sitting in on a conversation. You want to get a copy of Street Smarts. Stupid name, right? But it's by Linda Raschke, who who was probably, I'm not a futures trader genetically. I'm an options guy. And so, but she's a directional futures trader. And she allowed me to become a futures trader with her insights. The book is two traders, her and the other guy's named Lawrence. But I latched onto her thinking. And Street Smarts is the book. And that's actually well, you're not going to buy it physically anymore. It's not too long of a book. A lot of charts. Indicators are old. It's an old book, right? So the indicators aren't the most recent indicators, but there is ADX and MACD and stuff like that in there. But the lessons are timeless. Don't buy it today. Buy it the day after today. That type of stuff. Why? So that would be the book I'd recommend. Street Smarts by Linda Raschke.
Definitely worth adding to the list. Been growing the reading list for a long time now. Definitely will have to get caught up on it at some point. If my listeners are already not familiar with their work, they should be by now. But if they're not, where can they find you on Substack and on social media?
Yeah, on Substack, I have a newsletter, which is basically a big tent for precious metals and money and geopolitics. It's called Goldfix. So goldfix.substack or VBL, my initials, VBL Goldfix.substack. And we send out kind of like 2, maybe 3 emails a day. And it's not crap. It's analysis. It's breakdowns of analysis by banks. And something that's actually gotten pretty popular. We have a morning rundown that I go through. I just go through. It's kind of like a trader's prep. So we'll talk about fundamentals. We'll talk about events. And we'll talk about trading tactics. And so that's it. You can go there and sign up. We'll be happy to have you.
Yeah, definitely worth checking out. Lots of good stuff on the precious metals and all the current events going on. Obviously, with everything going on, it's hard to keep up, but Vince definitely will help you stay on top of at least his slice of the world. So I think with that, we'll be wrapping up. Thanks for stopping by, and we'll see you next time.